Happy Friday, Brian Manning here with the weekly update. Let's get right to it. So, Monday, Tuesday this week, relatively quiet news day. Not a lot to talk about there. Then Wednesday this week, we got existing home sales. So, this is existing home sales for the month of June. This was down 2.7%. It was weaker than expected. It's interesting if we look at the numbers as far as the inventory is concerned. We're still not even at pre-pandemic levels of inventory. They did come out and say annualized sales pace is like 3.9 million per year on average. If we look at pre-pandemic numbers, I think it's more in like 5 to 5.5 million per year. So that just means that there's a lot of people sitting on the sidelines right now. There's a lot of people waiting for lower interest rates. It's almost like kind of a spring is being wound up right now, and at some point in time when rates move lower, which assuming that they will in the future, it's like the spring is going to get released and it's going to kind of create some fury into the marketplace. But for right now, the spring is just getting kind of wound tighter and tighter and tighter. What's also interesting to look at is if we look at pre-pandemic numbers and we look at inventory, etc., we also see higher population right now. Population growth is up by millions of people. So there is demand out there that's just sitting off to the sideline. It's just a lot of sitting and waiting for right now. Thursday this week, though, we got new home sales. So new home sales, kind of the news there was the median price, had gone down 4.9%. And the media love this. Well, what's important to really know and pay attention to here is that median price is not home appreciation. So median price is just basically saying that there was less sales that took place across the country for new construction above the $500,000 price range, and there was more sales that took place in this $300,000 to $500,000 price range. So the median number went down, but all that's saying is that the amount of transactions that took place were taking place in a lower price range. It has nothing to do with appreciation. You have to be careful of that, and you have to watch that. Then today we get durable goods. So this is measuring large purchases across the country. I think the entire number was down like 9.3%. But if we look at the core number strips out volatile items such as aircrafts and military spending. So on a month-over-month basis, durable goods were down 0.7%. Still a fairly weak report, and it still shows that there's people spending less and less money out there in the U.S. economy. Realtors, we got 2 luncheons coming up next week, winning in today's market. We have a Boulder and a Denver class. I think it's at Black Belly in Boulder on Wednesday. It's at Capital Grille on Thursday. If you haven't come to this luncheon yet, we're running out of time where we're going to be delivering this content. You should RSVP. Also, we released a podcast. We got our first episode out there. Super excited. The podcast is called Balance in Motion. I'm just on there talking about how I think balance is bullshit. We're interviewing some great high performance people, and we're just talking about how people that are high performing and really all types are just kind of struggling and are always going to be struggling regardless of the market that we're in. And then if we know that it's hard to continue performing at a very high level, how do you kind of find this flow in your life when the pendulum is shifting back and forth? So if you're interested in checking out our podcast, go for it. I'm available 7 days a week, 8 a.m. to 8 p.m. You got any questions, you need a pre-approval, give me a call. Happy Friday. Have a great day.